I don't have the sharing right, so let me, while I get the presentation sharing right. So the major change which happened, at least on the passive side last month, and we have done a webinar on this last Friday itself, few days back, was the changes in the uh, index composition uh, of NSE indices. So last Thursday, in last half an hour, all the passive fund made these changes, and from Friday onwards, all these changes became effective. This change was part of semi-annual rebalancing, which happens every 6 months in March and September, and it is made effective basically on the last working day of March and September. So because Friday was the last working day of March, the rebalancing was made effective on that particular day. So what I'll do, while I had done the webinar on Friday regarding this, I'll do a very quick recap of what has happened in the indices managed by National Stock Exchange, because some of the changes were pretty substantial. So basically, what NSE does, it rebalances all the market cap based indices, all the sectoral indices, and most of the smart beta and thematic indices in March and September. And depending on the segment which you are looking at, you'll typically see changes, number of changes being more if index is based on small cap segment, and bit less if index is based on, let's say, a large cap segment. Now let's look at the changes which have taken place in total market cap index. 57 stocks moved in, moved out, and the weight of these stocks were very small, which simply indicates that most of the changes जो कि total market index में हुए were of micro cap stocks, right? And that's why you see that incoming stocks, 57 stocks का aggregate weight was just 1.2%, and outgoing stocks ka weight was 0.6%. One-way portfolio churn was only 1.7%. Same thing you can see on the multi-cap also. 30 stocks moved in and moved out, but the associated weight change was very less, because most of the stocks which moved in and moved out were part of the small cap segment and has the lower weight. In large and mid cap, 15 stocks changed, and again, most of the changes were mid cap stocks. So mid cap stocks which became smaller due to their market becoming relatively lower were moved out, and the small cap stocks which became larger and now qualify as a mid cap stocks and have relatively higher MCAP right now moved into the index. We have 15 stocks which moved in, moved out, and again the weightage is just 0.9% of outgoing stocks and 2.6% of incoming stocks. Now in mid cap index there were 17 changes, and here the impact in terms of weightage was also higher. So 17 stocks which moved out had a weightage of 7.5%, and the stocks which moved in had a weightage of 8.6%. So reasonably higher churn. But the two indices which impacts us the most is Nifty 50. So let's see what happened in Nifty 50. I think there has been a lot of conversation about the changes, because BPCL and Britannia Industries moved out. They were two well-established company, and Jio Financials and Zomato moved in, which are new age companies. And there were a lot of obviously debate about the fact that these new age companies either are not much profitable, they don't have such a longish history. There were question marks about their valuations and the fact that whether they deserve to have such a higher MCAP, etc. But the fact is that Nifty 50 covers top 50 stocks listed on National Stock Exchange. And the fact of the matter is that Zomato and Jio qualifies to be in top 50 based on the method, right? And that is why they came in. So based on the method, everything happened. and we'll talk about it. So Nifty 50, two changes were done. Again, it's very important. See the weightage of change. Uh, the stocks which moved out had a weight of just 1%. Stock which moved in had a weight of just 2%. So Jio and Zomato in aggregate have a weight of just 2%, right? For all the debate which we are having in last few weeks on Nifty 50 changes, the impact on weightage is just 2%. In next 50, significant change, almost 7 stocks moved in, moved out. Jio and Zomato were also part of it. So they moved from Next 50 index to Nifty 50 index. And some of the Next 50 stocks fell down to mid cap 150 index. So these were the 7 stocks in aggregate. And यहाँ पे the weight impact is significant. So 14.6% is the weightage of stocks which moved out, and 11.8% is the weightage of stocks which moved in. We'll also talk about alpha index also. There was significant change in alpha portfolio, which is very peculiar to alpha and momentum strategy. Alpha is an index which tracks stocks which are doing well. They simply look at past 12-month performance and capture stocks whichever are doing well, same as in case of momentum. It's just that alpha is rebalanced on a quarterly basis and momentum is rebalanced on a semi-annual basis. So in alpha, the rebalancing happened in March. It didn't happen in momentum. Momentum will happen in June when alpha will again be rebalanced. So in alpha, 13 stocks moved in, 13 stocks moved out based on their pricing performance, based on their stock performance. The stocks which went out had an aggregate weight of 37%, and stock which moved in had an aggregate weight of 46%. So this was the most impacted index in terms of portfolio reconstitution, if I can say, in Nifty rebalancing, which happened in March. Very quickly, as you can see in the slide, Zomato and Jio Financial came in. Nifty 50 and Britannia and Bharat Petroleum moved out. Just look at the full market cap and free float market cap, right? Even after significant fall which Jio Financial has seen, right, in last 1 year, the Jio Financial stock is down by almost 34%. You can see in the table. Even then, its free float market cap is 72,000 crores. And the free float market cap of Zomato is 1,40,000 crore, which is significantly higher than Bharat Petroleum and Britannia Industries, whose free float market cap is 52 and 57,000 crore respectively. So these stocks were included in Nifty 50 because they had a very higher free float market cap. In fact, Nifty only includes a new stock in the portfolio if the incoming stock's free float market cap is at least 50% higher than the uh, smallest constituent of Nifty 50 or the constituent which it is replacing. I think that's a better way to say it. So, and this data is checked based on 6-month average, and for March rebalancing, that 6-month average is January end data, and that was checked, and Zomato and Jio Financial were both having higher free float market cap by a margin of 50%. That's why they were introduced. So, but very minuscule change, like I mentioned, that Zomato will have a weight of 1.3% and Jio will have a weight of 0.7% only. In next 50, 7 stocks moved in, 7 stocks moved out. 2 big stocks, like I mentioned earlier, Zomato had a weight of 6.3%, Jio had a weight of 3.3%. They moved into Nifty 50, and that's a significant impact from a weightage point of view. Then BHEL, NHPC, Union Bank, IRCTC, and Adani Total Gas, they moved down, right? They are now not part of the large cap universe. In terms of stocks which came in, it was Indian Hotels, Britannia Industries, and Bharat Petroleum. So Britannia and Bharat Petroleum from Nifty 50, it came down to Next 50, and then you have CG Power, Hyundai Motors, Bajaj Housing Finance, Swiggy. So a couple of new IPOs also which have come into Nifty Next 50 index. right? So you can see that how Nifty Next 50 has also shuffled. So in terms of changes, pre and post next 50 looks a bit different, right? Because top two stocks have moved to Nifty 50. So you now the top stock is Indigo, then Vedanta, HCL, Divi's Lab, Varun Beverages, Indian Hotel, Cholamandalam, Tata Power, Power Finance, Avenue Supermarket, etc. So some shuffle has taken place, because in top 20 you can see a couple of new names also. From a sector allocation point of view, you can also see the changes which has happened in these sectors. So in a way, sorts of you'll see Nifty Next 50 behavior changing a bit, because you are the two new age companies, the bigger ones, have gone into Nifty 50. Having said that, Zomato in a way has been replaced by Swiggy, so I guess it's more like a like for like replacement, size apart. Now, very quickly, the last one which I'll be talking about is Nifty 200 Alpha 30. And I'm talking about this one because there are a lot of questions, because a lot of people who are watching this video have invested in Momentum and Alpha. And like I mentioned, that Alpha rebalance every quarter and Momentum rebalance every every 6 months. And both, from a strategy point of view, if you're talking about Alpha Momentum, they will always have a higher churn, because you're trying to capture the trend of the market, right? You're trying to capture stocks which are doing well and remove stocks which are not doing well. So as you can see, the stocks which have moved out of Alpha 30, Bajaj Auto, HAL, Siemens, Cummins India, Hindustan Petroleum, Torrent Pharma, ABB, IRFC, Zydus, etc. And these stocks have moved out. Whereas and most of these stocks have performed poorly in last 1 year. And look at the stocks which have moved in: Bajaj Finance, Hindalco Industries, Shriram, Divi's Laboratory, Cholamandalam, CG Power, UPL, Ashok Leyland, etc. So this is a significant churn which has happened in the Nifty 200 Alpha 30. Now, this is the latest portfolio. Like I mentioned, that shift has been significant. So apart from the stocks which have changed, so the stocks which are sorts of common have been highlighted in green, where stocks which are not common change have not been highlighted. So you can see which are the new stocks in the portfolio. A reasonable shift in the sector allocation also. So you can see capital goods from 15.8% now have a holding of just 8.4%. Consumer services from 15.3% have an equivalent weight of roughly 14.9%. Financial services weightage have increased significantly from 14% to 26.7%. Right, consumer durables have gone down from 12.2% to 8.4%. So the major change is financial services का weightage बढ़ा है, and capital goods, auto and auto component, etc. If I can say, capital intensive segment ka weightage has gone down a bit. So this was on the rebalancing which has happened last week itself. I have done a very detailed webinar on Friday itself, and the recording will be there on the YouTube. So if you want to know more about how rebalancing has happened and how other indices have changed also, like bank, IT, financial services, etc., you can go and check out that particular video also, and you'll get to know more about what sort of changes have happened in NSE as well as BSE Select IPO Index, which the changes which happened last week. Now, in terms, let's talk about now index performance and review what has happened in India and globally also. And this particular table, the performance table, is latest. It is basically 3:30 snapshot today. So this will include the correction which has happened today, right? And Nifty closed down by almost 1.5% or so. So now we are seeing in last 1 month where a significant pull-up has happened, right? Whether this is sorts of end of correction or just a relief rally, and we are going to see more volatility and some more correction going forward. that is up for debate. I believe that this was more of a relief rally. The volatility will continue in April. We might see more correction, especially with the question mark on tariffs and how the tariffs will impact Indian uh, Indian stock Indian companies. And also one very big question mark will be how our economic numbers are going to come out and how corporate earnings are going to come out, especially the Q4 corporate earnings will be especially looked with a very keen eye. I'm seeing a lot of people raising their hands, so please, if you have question, please post in the chat box. We will reply via text, or I'll take the questions at the end of the session. So, like you can see that in terms of recovery, Nifty 50 is sorts of down only by 4.7%, was up by 4.7% last month, and now it is down around 12% from its 52-week high. Also, one very significant recovery was done by Nifty Next 50 also, where in last 1 month it has moved up by 9.3%, and now from its 52-week high it is down roughly about 20% or so. So we had talked about Nifty Next 50 multiple times in our previous sessions as how this large cap index, uh, because it captured a lot of these PSU companies which had performed really well and then corrected significantly because of overvaluation, etc. So Next 50 actually fell down more than what even small cap and mid cap fell. But it was in a way good to see that then it moved up quickly also, almost 9.3% recovery. In fact, in our previous session, I talked about that one place where people can look to invest in is Nifty Next 50, because it makes sense from a valuation point of view. Now, even if you are looking at a valuation, it is reasonably valued. It is very difficult, to be honest, to compare Next 50 to its historical valuations, because the point is that Next 50 portfolio composition changes significantly, right? Because this is an index where reasonable churn happen, and because of which the behavior changes, and if behavior changes, the average P over a 5-year, 10-year may sorts of capture the average of different sectors, whereas current composition is sorts of based on different segment. For example, right now, Nifty Next 50 is sorts of PSU heavy, right? So lower PE seems intuitive, right, because of the presence of higher number of PSU companies, and probably that makes the comparison with a 5-year or a 10-year PE not very right. Right. For example, Next 50 10-year average is around 25.6%, and current is 21. So it would seem cheap, but the composition which was earlier for Next 50 was very different from the composition which it is having right now. So it is not an apple to apple comparison. Now, even looking at small cap and mid cap, both the index recovered up by 8.7 and 6.5% respectively. They are down from 52-week high by almost 19% and 16%. So mid cap is down by almost 16%, and small cap is down almost 19%. Uh, in terms of recovery, very interesting to see that utilities, power, Nifty commodities, energy, uh, oil and gas, etc. So this segment, especially recovered by more than 10%. Having said that, they fell also significantly before this sorts of relief rally which they have seen. So utility is still, after 14% recovery, is down 24% from its 52-week high. BSC Power, after 12.8% recovery, is still down 26%. Energy is down, still down 26%, and oil and gas is still down 24% from its 52-week high. Same can be said by PSU also, where you can see that it is sorts of BSC PSU is recovered almost 13.8%, but is sorts of still down 21.4% from its 52-week high. In terms of relief rally, the only exception was IT, which obviously is facing multiple headwinds because of geopolitical issues. Also, it it is down by almost 3.5% in last 1 month, and hence now from a 52-week high point of view, it is down by almost 22%. So if I'm looking from a 52-week high, now several segments looks sorts of in the range of 15 to roughly around 20-25% negative, right? The only sorts of segments which have not fallen significantly and have also sorts of recovered is bank, which is now down uh, only 6% from its 52-week high after moving up 5% in last 1 month. You can see financial services only down by 3% when it is sorts of recovered 6.5% in last 1 month. From a valuation point of view, you can look, we have charted uh, the best PE, which is the Bloomberg estimates, and then have written down 3-year, 5-year, 10-year, and I have also mentioned sorts of premium to discount. I have sorts of said that please don't look at sorts of Nifty Next 50, because I don't think that's a correct comparison picture which that is portraying. But apart from that, Nifty is now trading at valuations which is below average. This has been discussed at multiple forums multiple times, and also from a valuation point of view, we have been talking about how sorts of attractive financial services look. And if you look, it's right now trading at a valuation of roughly around 16, whereas its 5-year average is roughly around 19. So if you are looking from a valuation point of view, I think financial services is one segment which you can look at, and large cap is another segment which sort of you can look at from a from a segments which are looking okay from a valuation point of view. Now, also one thing which, apart from that, last two segments, media and reality, have corrected almost, still remains 30% lower than its 52-week high, even after a relief rally of around 8 to 3% respectively. Now, we have been focusing too much on India, but very interesting to say when you're looking at US market also, and you have to look down in the table. FANG is down by almost 10%, right? So we have been talking about Nasdaq and FANG and even S&P also entering into the correction territory, which is rough, which is a seg, which is referred when a index or a market has fallen by more than 10%. So you can see FANG is down 10.5%, and from its 52-week high, it is down by almost 18% now. From a valuation point of view, it looks pretty okay, right? Almost comparable. And Nasdaq also is down almost 13%, and S&P is also down by almost 8%. So S&P is not in a correction territory, but now we can see that Nasdaq and a FANG is in correction territory. I think from US point of view, we'll talk about it. There is a lot of concern about inflation becoming more of a concern with Trump policies, especially levying tariffs, which is expected to increase inflation. Also, now the probability of recession is increasing, and in fact, in the recent study, Goldman has sorts of given a 35% probability of recession in US. Though corporate earnings still sorts of look good on the positive side itself. So that is something which we'll have to see how corporate earnings are coming out, how sticky the inflation is, and also the what impact on tariff of tariff on US economy and globally is going to be. And that's a big question mark, right? lot of volatility in the market is driven by this very sorts of a fluid situation about in which on which countries tariff will be levied, on which segments, and what will be the quantum of the tariff, etc. And that is obviously keeping the market nervous. Now, if I'm looking at China, because a lot of people are interested in China, if you look at last two rows, you'll see sorts of in last 1 month, Chinese markets have been flattish. Hang Seng Tech, which tracks 30 tech companies, is down by almost 3%, whereas Hang Seng is flattish around 1%. If you look from a 6-month performance point of view, 13% and 9.8% respectively. So this is sorts of a chart of all the major indices and their performance in last 1 month. And so now from a stock drawdown point of view, right, because in our previous conversations we have been talking about the fact that the bloodbath in stocks have been much more than what we are seeing in broader indices, and it's also important to talk about it, right? So this table basically illustrates from Nifty total market cap index, which is a 750 stock index. Hence, it covers all large cap, all mid cap, all small cap, and 250 micro cap. What has been the changes in the stock sorts of movements, right? And so, for example, if I read on a 6 monthly basis, out of 750 stocks, 525 stocks have fallen more than 10%. 354 stocks have fallen more than 20%. 179 stocks have fallen more than 30%, and 13 stocks out of 750 have fallen more than 50%, right? Now, if I look at the rightmost column, I think data becomes a bit more interesting. And you see, out of 750, 708 stocks have fallen more than 10%. 590 stocks have fallen more than 20%. 409 stocks have fallen more than 30%. So more than 50% of stocks have fallen more than 30%, and then 65 stocks have fallen more than 50%. So even though recovery has happened in last 1 month, the numbers remain obviously very stark. What I've also done is talking about how recovery has also sorts of happened in last 1 month. So if I'm looking at a median drawdown, right, from 52-week high, कि 52-week high से stocks on a median basis कितना गिरे हैं? The median is minus 31%. And if I look on the opposite side, sorry, the text is wrong. Median recovery at a stock level from 52-week low, which means lower से कितना recover हुए हैं? That is 20%. So that's interesting, right? अपना 52-week high से median अभी अपना जो चल रहा है वो 31% चल रहा है, but low से 20% median recovery दिखा रहा है. So that is how. In fact, again, the last 3 points highlighted that in last 1 month, 285 stocks have given more than 10% return, 66 stocks have given more than 20% return, and 19 stocks have given more than 30% return. And this is again from a total market cap universe of 750 stocks. That's pretty interesting. Again, very quickly, when we are looking at indices on which we have funds on, just would like to highlight, we have already talked about, and this is March ending data. So you'll see it to be a bit different on what the earlier slides were showing. So you see that in last 1 year, now let me talk about 1 year performance and 3 year performance, right? So 1 year Nifty is down, Nifty is up by 6.7, Next 50 4.8, even though Next 50 had fallen significantly. You can see small cap also giving 1 year return of almost 6% now. एक बीच में हम लोग last month बात कर रहे थे कि now most of the indices are giving negative return. That has sorts of gone out of the window because ये सब recover हो गया. For example, एक साल में small cap has given 6% because in last 1 month it has recovered by 9% or so. see, even after this fall of almost 19% from its 52-week high, 2-year return of small cap is around 32%. 3-year return of small cap is 17.9%, and 5-year is 37.5%. So that is something which people should sort of take away from this slide, that even after this correction which we are seeing, right, if you're looking at 3-month and 6-month correction, you're looking at a sorts of a very uh, depressing numbers, right? We are talking about alpha down by 22% from a 62 if we are looking at 6-month return. But look at, even after this, 2-year return is 34%, 3-year return is 17.6%, 5-year return is 30.8%. If you're looking at sorts of even multi-cap, which right now is my favorite product for investment, Nifty 500 multi-cap 50, 25, 25, it is down by 13% from 6 months. But even then, in 2-year point of view, 25.7, 3-year 15.8, etc. So that's how, just look at, even after this correction, how good 2-year, 3-year, 5-year, 7-year numbers are still looking. Yes, the people who have invested recently have or have entered the market recently only uh, have had their hands burned because of how 3-month and 6-month have numbers are looking. But people who have been investing for a longest time should obviously look at longer numbers, and people who entered the market recently should obviously look at longer term picture and how markets have performed in the long run to sorts of know that things will sorts of improve in the long run. Though, as I mentioned earlier in my presentation, that I expect market to continue to be volatile this April. Internationally, I've already mentioned that FANG is down by almost 12% in INR terms. It has given great performance in last 2-3 years, like everyone knows. So his top 50, Hang Seng Tech sorts of saw a very sorts of edgy performance last month, down by almost 3.1% or so, but long term almost 1-year return of 62%. We have already been talking about gold being sorts of a very good addition right now in your portfolio. While it may not give returns like how it has given in last 1-2 year of almost 32% and 22% respectively, I still believe that there is some upside to gold and silver, especially silver. So uh, uh, look at adding gold and silver in your portfolio in a staggered manner. Staggering will typically help you sorts of average out the prices, and if there are market dips, then probably you can use that as an entry point also. Now, I've already talked about in terms of valuations, very sorts of, I talked about the fact that Nifty 50 is looking at a discount. Next 50 uh, is looking at a discount, but I think the number sorts of portray a better picture than actually it is. I like Next 50 from an investment point of view because it has corrected by 20%, and typically Next 50 segments does well in the long run. So if you're looking for a decent entry point, I think Next 50, anything Next 50 20 plus correction, 20% plus correction is a good entry point. So look to invest in Next 50 whenever the markets are correcting. If volatility in April continues, you'll get good entry point in Next 50. 20% plus correction makes sense in Nifty Next 50, especially looking at the portfolio. Mid cap looks round about average when you're comparing it to 5-year. Small cap still looks at a reasonable premium, and from a sectoral point of view, like I mentioned, that several sectors, especially financial services, looks good now from an allocation point of view. So if you're looking something which is, let's say, attractive from a valuation point of view, I think financial services is something which is sorts of standing out from the valuation uh, perspective. Globally, while the avenues are closed, I will sorts of stay away from investment in FANG, etc. Because right now I'm a bit concerned about what Trump policy impacts will have on the US market, especially when the US market valuations is on the higher side. Though some corrections have taken place, but I think you'll find reasonable entry points in US also. Now, very quickly, what is happening in India from FII's FII point of view? So, in last 6 months, FII have pulled up 2.16 lakh crore, which is significant, right? So basically, the blue line is showcasing the 6 month cumulative outflow. It gives you a better picture कि long term trend क्या दिख रहा है. And you can see in the orange graph, which is the monthly outflows, that in last 6 months, only 1 month was positive, and there were 5 months negative, out of which 2 months, which was in Jan and I guess in October, were significantly negative. But having said that, in March they have only pulled out 3,900 crores. So sorts of FII selling on an overall basis in March seems to be on a uh, on a on a much smaller scale than what we are seeing in last 4-5 months. So that is something which is interesting from an allocation, from a FII point of view. From from earnings point of view, like I mentioned in my previous call, lot of this downfall in the market. So white line is Nifty 50, right? And then I have plotted the earnings of 5 quarters. One previous quarter, which is blue line, and 5 upcoming quarters. So calendar quarters. So this is March ending, this is June ending, this is September ending, and this is December ending quarter. कि quarterly earnings के projections कैसे change हो रहे हैं, right? And white line is, as I mentioned, Nifty 50. And you can see that Nifty 50 fall has also sorts of been in sync with the poor earnings which has been coming out, right? And that trend sort of started Q2 last year, when we first saw sorts of uh, poor numbers in the consumption sector, right? There was a surprise that how sorts of urban consumption is showing weakness, right? And you saw consumer segment companies taking a good beating because of it. And then obviously there were a lot of concern on the slowness in the capex also. And see the how earnings have sorts of uh, uh, earning estimates have corrected. So, for example, orange line is the March quarter ending earning. The purple line is the June quarter ending. The yellow line is the September quarter earning, and uh, the light blue line, I guess, is the December quarter earning. And this all just talks about how earning estimates have been sorts of revised downwards, right? And we have been talking about it. And and with this revision downwards, we see Nifty 50 also correcting uh, reasonably significantly, right? And I believe that market will very seriously look for the Q4 earnings and how they come out, and whether are we still in the downward trajectory, or are we showing signs of revival in terms of corporate earnings. Uh, so that was from an India point of view, from FII and corporate earning point of view. This 3 slides, sorry, it might be less visible, but but the left graph talks about how sorts of Fed dot plot has changed. The gray line talks about the dot plot which was given by Fed in December last year, and the yellow line talks about the dot plot. तो dot plot क्या बताता है कि basically Fed की expected fund rate का target क्या है, right? So now you can see that Fed target for 2025 is basically now upwards around 3.8%. It was roughly around 3.2, 3.3, lower than that, around 3.3%, if I remember correctly, which they mentioned in December. So Fed has been sorts of revised their Fed fund rate target upwards, and that is purely because of the fact that they are now concerned about the inflation also because of the tariffs which are being levied. So they are unsure, and they, like always, like in 2 3 years, they will observe the data on a month-on-month basis, and I think they will take the calls accordingly. So there have been conversation about 2 cuts, 3 cuts, but having said that, it totally depends on how the inflation will look like, and also I think the US growth will also starts now coming into picture, right? There has been increasing conversation about whether the US will enter into recession. I think the probability has been increased by several market watchers, and I think that is something which will sort of start bothering the Fed also. The right one is obviously talks about how dollar index have moved, and which has been a surprise, right? At the start of the year, dollar was showing strength, and that has also come down. If you look at dollar index, it has come down, and it's roughly around 104 from its peak of 109. So dollar also is sorts of not showing the strength which was expected. And from an inflation point of view, as of now, it looks to be curtailed. For example, the survey was roughly expecting around 2.9. It has come around 2.8 on a YOY basis. Very quickly, in terms of, we talk about flows because that typically tells you where people are investing. It's an interesting data point to look at. So in last 3 months, which is the last two column, you can see that people have majorly invested in Nifty 50. So if I add, look at ETF, almost 2.8 thousand crores, and index 4,000 crores, and commodity. So 7.6 thousand crores have come in commodity. So if I pick out two areas where people are investing, that is Nifty 50 and commodity in last 3 months. So that's an interesting data. Sorts of influence smart beta have sorts of muted a bit, but I think it's still respectable around 1.2 through ETFs, and almost 3.3, which is roughly around 4.5 thousand crores in smart beta, and next 50 is roughly around 3,000 crores. So I think a lot of people in last 3 months have been also investing in next 50 just to take advantage of the corrections in next 50. So again, quickly, Nifty 50 is seeing flows in last 3 months to the tune of almost 6.8 thousand crores. Then comes commodity. As expected, gold and silver are doing well, so 7.6 thousand crores. Then we are seeing smart beta, not as much as earlier, but roughly around 4.5 thousand crores, and next 50 around 3,000 crores. So I think those are the three couple of good segments, and I'll talk about where we feel that you guys can look for investments in when I just show you the funds which we have. Trading also, if I look in past 3 months or so, apart from liquid, commodity and Nifty 50, and interestingly, BFSI is something where we are seeing a lot of trading activities happen in the ETF market. So ETF basically tells you again the pulse of the market. So you're seeing commodity, Nifty, and this is average daily trading, and financial services. As expected, I was talking about financial services. A lot of people are finding comfort in the valuations, and that's why I see investment in financial services sector. Now, I think this will be the last slide before I take questions. So this is the entire product basket of Mirae Asset. Our domestic broad-based offerings like Nifty 50, mid cap, Next 50, gold, silver, multi-cap, etc., are the lowest TERs in the market, right? Our Next 50 is at 5 basis point, mid cap ETF is at 5 basis point, gold ETF, silver ETF, liquid ETF, etc., bank and IT, etc., are the lowest TERs. Whereas we also have a lot of these unique products which only Mirae Asset has, and that's how we sort of uh, uh, portray ourselves in the market that we will have solutions which are the lowest cost solutions, which you can use to build your core portfolio, and then we'll have very unique offerings, which sorts of, depending on your risk profile, can find placement in your portfolio. Now, I promise that I'll talk about the couple of funds which I find interesting, right? So from broad-based offering, I'll pick out Next 50. So if you're looking Next 50 correcting between 20% to 30%, I think that may be a good entry point in Next 50 from a 3 to 5 year point of view. So Next 50 is something, if you're looking at corrections of around or from a 52-week high, like I said, that right now it's trading at 20% correction. If you see corrections between 20 to 30% in Next 50, you can do a staggered investment in Next 50. Then I'll pick out multi-cap. If you're not sure कहाँ पे डालना है पैसा, large cap, mid cap, Next 50, etc., do in multi-cap. Multi-cap is 50% in large cap, 25% in mid cap, 25% small cap. It's a sort of a no-brainer product. If there's a broad-based correction, multi-cap allocation of 50% large cap, 25 mid cap, small cap makes a lot of sense. So that is something which I'll suggest a lot to people who want to take a bit of an aggressive call. If you want to take a bit of a risk averse call, equity allocator fund of fund which we have, which invest in Nifty 50, Next 50, and mid cap 150 based on their valuation attractiveness, is very good. The cost of the product is very low, including underlying ETF. The direct plan is roughly around 10 to 12 basis point, which is probably very, very low, and that's why it finds a lot of interest from wealth segment also. So I'll pick out three, like I mentioned, Next 50, multi-cap and equity allocator, depending on your risk profile, where you want to invest in. In commodity, gold and silver, both are looking attractive. We can do investment in a staggered manner. In smart beta, I'll say that alpha has corrected significantly. It is down 22-23% from its 52-week high. So if you want to start investing in a staggered manner, alpha has become sorts of attractive. But I'll say that since I expect the market volatility to continue in Alpha 30, please look at staggered investments only, and only at small amount, because this remains a high risk, high reward product. So if your risk if your risk profile permits, add Alpha 30 on a smaller quantum. And last product which I'll suggest that you can have a look at is New Age Consumption ETF as well as Fund of Fund. It only captures the discretionary consumption segment, which is consumer services, fintech, auto, tours and travels, uh, uh, other related aspects, AMCs, etc. So it's a very B2C centric product, जहाँ पे we are focusing on companies and sectors which are typically part of discretionary spending. So this segment has corrected a lot, and I think from a investment point of view, at these levels, I think have started to make a lot of sense. So do staggered investments. Couple of products again which I like to highlight is Next 50, multi cap, equity allocator, New Age Consumption, gold and silver, and Alpha 30. Again, in all of these, I'll suggest an staggered investment, and you can choose the product which sorts of fit your risk profile and overall portfolio. So that's it from me. I'll just I'll pause here and I'll look at questions which have been posted. I can see several questions. I'll take as many as I can. So if you have any questions on the products, on the markets, etc., please you can post it in the chat box and I'll be taking them. This question by Suraj Jatwani, he's asking if we need to choose two, three ETFs, then can you please suggest which one is better? We are holding mid cap, multi cap, and BFSI. Like I mentioned that if you are holding a broader market portfolio, I think I'll suggest a multi cap ETF because like I mentioned that it 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 gives you that 50% exposure in large cap, 25 in mid cap and small cap. I like it for the fact that it also participates in the correction which has happened in mid and small cap segment. So if you don't want to take a theme call, consumption has corrected significantly, looks attractive. Like I mentioned, new age consumption. It has 25 exposure towards auto also, which has corrected. So if you don't want to take a theme call like consumption or BFSI, if you want to take a broad market call, then I think multi-cap is something which I'll suggest from an investment point of view. So there are a couple of questions on Hang Seng also. So see, first of all, our Hang Seng Tech is sort of closed for investor. Uh, AMC cannot create fresh units. So while the ETF is trading on the exchange, we are not able to create fresh units because of SEBI and RBI restrictions on the entire mutual fund industry. So these units, not only of Hang Seng, but FANG also is trading at a significant premium. And that premium is roughly in the range of 15 to 20%. So be very aware, cautious if you want to buy this particular Hang Seng Tech ETF or FANG ETF, because what will happen is that you will end up buying at a 20% higher cost. So your PNL will be negative till NAV actually becomes 20% more, right? In a way, unless until premium continues and you are able to sell 1 2 months down the line again at a premium of 20%. So uh, uh, it's a funny mathematics which is going on in this offshore ETFs. So be aware that you are buying at premium. That will affect the realized returns. How it will affect the realized return, that will depend at the levels at which you will end up selling. Whether at that point in time ETF still is at premium, or is it at discount, or is it at a uh, fair value, etc. So, but having said that, I think China looks to be an uh, uh, interesting sorts of a place to invest in. I think property market now broadly people are talking about stabilization even in property markets, and that expectation is probably by the end of this year or next year. I think next year is something which some of the expectations uh, sounds more practical. Uh, but having said that, I'll probably wait for 1 2 weeks, see what sort of tariffs are being levied by US, and if there are any countermeasures which are taken by China. But if those negatives are not significant, then you can take a call on China. I think my view is right now positive on China. If nothing significant happens from a tariff war point of view, but please be very cautious of levels at which you are investing in. So there is one comment which is very interesting, which is few kinds want to take high risk investment horizon 4 year plus. Can I take a call on Alpha 30, Alpha 50 for big allocation? So I think if the horizon is 5 year, then alpha investment makes sense in Alpha 30 or Alpha 30. For 5 year horizon, you can invest in Alpha 30 or Alpha 50. Big allocation, I'm not sure how big you are talking about, but what I'll suggest is that if people have not invested at all in smart beta, first educate them how this product is expected to behave. It typically underperforms in bear market, does well if there is a sustained bull market, which you can see based on historical performance. So first educate them, and then I think start taking incremental staggered allocation based on their risk profile. So from a 5-year point of view, I think Alpha 30 makes sense. Do staggered allocation this year, and the percentage in their portfolio depends on their risk profile. But again, I'll suggest that please educate them what sort of drawdown also this product can have. There's one question which is can I see performance of small cap momentum? Would you be sharing this PPT? Uh, I think there's smart beta PPT which is updated on our website. If it is not the case, we are updating a PPT on smart beta funds which we have, and I'll make sure that one version is present on the website also. So probably soon you can see performance of small cap momentum quality updated in the presentation format. But just visit our website. I think there should be you can refer to the fact sheet, etc., and see the performance. And if you want to see the historical index performance, just look at the smart beta presentation which we typically upload, or the fund presentation. There's one question, I think I should take it, which is please elaborate on the offshore ETFs at premium rate. Does that mean my share will sell at a discount of 20% considering realized return? You have not written your name, so basically now it depends on market factor. So for example, I'll just take two examples. Let's say today I'm buying Hang Seng Tech ETF. आज उसकी fair value hypothetically let's say 100 रुपए का है, 120 रुपए में खरीदूंगा. अभी जो NAV है वो बढ़ करके 100 रुपए से 110 रुपए पे हो गई, राइट. एंड 110 रुपए पे भी वो 20% प्रीमियम पे चल रहा था. तो 110 रुपए 20% ऑलमोस्ट 132 रुपए पे चलने लग गया, राइट. तो आप क्या कर रहे हो? यू आर सेलिंग, गोइंग टू सेल दैट ETF which you purchased at 20% premium at 120 rupees at 132 rupees, again because it is trading at a 20% premium. So for you यहाँ पे कोई impact नहीं है. But let's say premium reduced by 10%, right? So 110 के NAV में जब 10% प्रीमियम आपने ऐड किया तो 121 रुपए ही हुआ. सो आपने खरीदा 120 रुपए में, इंडेक्स 10% बढ़ गया, बट प्रीमियम क्योंकि 20% से 10% आ गया, तो उसका जो अभी एक्सचेंज में नाव चल रहा होगा वो 121 रुपए के आसपास चल रहा होगा, 121 रुपीज. So you're selling at 121, you bought at 120. So you just made hardly any return, less than 1% return, right? Because premium shrank. दूसरा केस, लेट्स से प्रीमियम ही गायब हो गया. 100 रुपए का था, 110 रुपए हुआ, प्रीमियम ही नहीं है, तो आपने 120 में खरीदा, 110 में बेचा, यू इनकर्ड अ लॉस ऑफ ऑलमोस्ट 8-9%. इसका वाइस वर्सा भी हो सकता है. लेट्स से प्रीमियम 10% चल रहा था, आपने 100 का शेयर 110 में खरीदा, स्टॉक नाव 10% ऊपर गया, बट प्रीमियम भी 10% से बढ़ के 20% हो गया, राइट. सो आपको रिटर्न भी मिलेगा और इंक्रीज प्रीमियम जो हो गया वो भी मिलेगा. So it is basically depend how market is behaving, because two things are, you should basically do two things. One, change in the value of the fund, right? Return of the fund plus minus change in the premium of the fund, premium discount of the fund. So इन दोनों का जो combination होगा वो return आपको मिलेगा. If you are very lucky, it can be higher also. If markets are absolutely sorts of not moving anywhere in terms of premium discount, you'll get a fund return. अगर bad लग रहा तो आपको दोनों side पे impact आएगा. I think so there's a question from Suraj. I've already spoken about Hang Seng Tech ETF. Uh, also one question is on BSE Select IPO ETF. I think this product does not invest in pre-IPO phase. It only invests in IPOs after they get listed, and that too after 3 months of listing. So the idea is that ETFs from a regulation point of view are not allowed to invest pre-IPO. The next best thing we can do is to let the initial volatility fade, right? And that's why there's a 3 month of sorts of period where sorts of nothing is done. And after 3 months of listing, we assess that if IPO is part of 500 in terms of market cap. So we are only looking at large, mid, and small cap in terms of IPOs and spin-offs. And if they are part of top 500, these IPOs and spin-off, then only they are included in the next rebalancing. By then, typically initially volatility subsides. By then, typically you have one quarterly earnings or so. By then, a lot of lock-ins also get over, and then when they get included, typically they are part of the index for a period of 5 years. So all these spin-offs and IPOs, if they are in top 500, will get included in this portfolio after 3 months of listing in the next index rebalancing. For example, this rebalancing which happened in March 20 got effective on 24th March. Your new stocks like Swiggy, Hyundai, etc., became part of the portfolio. You can listen to that particular conversation update and the portfolio in the session which I did on Friday, and you can find it on YouTube. So one last question, one Baiju TS is asking, I would like to invest in an ETF which in lump sum and SIP can give a better return than small and mid cap, but at a lesser risk and volatility. My investment horizon is for 5 years. So what I'll suggest is you can use a sorts of combination of multi-cap as a base plus low volatility ETF and alpha ETF. So what will happen is that alpha excess volatility will be taken care of low vol. Yes, low vol had a drawdown recently, but that was sorts of uh, one of a scenario where FMCG and consumption stocks fell significantly more because of slowdown in urban consumption, etc. But what I can suggest is that use base as a multi-cap ETF, and then on top of it you can allocate in low vol and alpha sorts of, and that will hopefully create a portfolio which should give you good return with a curtailment on volatility. You can refer to your uh, investment advisor, and I'll suggest that if you are investing in smart beta product, do look at cyclicality and other factors before investing. So yeah, I think these were all the questions. Thank you everyone for attending this webinar. This is something which we'll be doing on a monthly basis, reviewing market, reviewing our funds, sorts of commenting on what can be done, uh, uh, etc. So hopefully I'll see you next month talking about markets and products again. Please take care. Have a great day, and goodbye.